Today on RoxomTV News, Bitcoin gets dragged into the newly released Epstein files, and Bitcoiners are pushing back hard on guilt by association. The U.S. and Iran head to Oman for nuclear talks, even as drones get shot down and oil tankers get harassed in the Gulf. Plus, Ukraine and Russia are back at the negotiating table in Abu Dhabi, with missiles still falling and the gap between both sides as wide as ever. All that and more right now on today's show. Let's get into it. Happy Wednesday and welcome back to another edition here at RoxomTV News. I'm your host, Hank Hudson. Our first story this morning is starting thousands of miles from the front lines as negotiators are gathering in Abu Dhabi to test whether diplomacy can move faster than the war. Ukrainian and Russian delegations have opened a second round of U.S. brokered peace talks, renewing efforts to end Europe's largest conflict since World War II. Now, the two-day meetings bring together representatives from Kiev, Moscow, and Washington after January's talks failed to produce a breakthrough. Ukraine's chief negotiator, Rustem Umerov, says discussions will split into smaller working groups before returning to joint sessions in an attempt to narrow the differences. The talks are unfolding as fighting intensifies. President Volodymyr Zelensky says Russia used a recent pause in energy infrastructure attacks to stockpile weapons, then launched a record barrage of ballistic missiles this week. Russian strikes have again hit power plants and civilian infrastructure, deepening winter hardship and reinforcing Ukrainian skepticism about Moscow's intentions. At the negotiating table, the gaps remain wide. You see, Russia is demanding Ukraine withdraw from the entire Donetsk region and is seeking influence over the Zaporizhzhia nuclear power plant, Europe's largest, located in Russian-occupied territory. Now, Ukraine has rejected any unilateral pullback and says any agreement must freeze the conflict along current front lines. Russia currently occupies roughly 20% of Ukrainian territory, including Crimea and parts of the Donbas. Public opinion in Ukraine weighs heavily over the talks, with polls showing most citizens oppose giving up land for peace. For the Trump administration, Abu Dhabi is a test of whether sustained mediation can bridge positions that remain far apart. And for audiences at home, this matters because the outcome shapes European security, energy markets, and the credibility of U.S. diplomacy. With missiles still falling, expectations remain tightly restrained. Moving on to our next story, in Caracas in Washington, a quiet financial experiment tied to Venezuela's political upheaval has reached an unusual milestone. The United States says it has now returned the full $500 million generated from the initial sale of Venezuelan oil under a rare deal struck after last month's dramatic power shift. A U.S. official confirmed the final $200 million tranche was transferred this week, completing payments from oil sales that followed the capture of President Nicolas Maduro during a U.S. military operation in early January. Now, under the arrangement, Venezuela was allowed to sell its own oil under U.S. oversight, with proceeds temporarily parked in Qatar before being released. American officials say the money was meant to keep the Venezuelan state functioning during a fragile transition and prevent an economic collapse. Secretary of State Marco Rubio told Congress the funds were used to pay teachers, police officers, firefighters, and maintain basic public services. Now, Washington retained influence over how the money was spent, with U.S. officials stressing the funds were disbursed at American discretion and intended for the benefit of the Venezuelan people. Now, the Qatar holding account was designed as a temporary measure, while U.S. officials work on a longer-term plan to route future oil revenue into a U.S.-based fund with formal oversight rules. This marks a sharp departure from years of sanctions and financial isolation. So rather than blocking oil exports outright, the Trump administration has shifted toward managing Venezuela's revenue stream directly, arguing controlled cash flow is preferable to economic freefall. Critics warn the approach risks pulling Washington deeper into Venezuela's internal governance and exposing it to political blowback if reforms were to stall. Now, for those of you at home, this should matter because it signals a new model of economic leverage, replacing sanctions alone. Now, whether this experiment stabilizes Venezuela or entangles the United States further will shape how similar crises are handled in the future. We're going to take a quick break here at Roxom TV News, but when we're back, we're going to be joined by a special guest to talk about our top Bitcoin story of the hour. So stay tuned, that and more coming up right after this quick break.
The last thing I will let happen to humanity is Jeffrey Epstein rob us humans of the invention that is Bitcoin. That's the last thing I will do. Fuck these people.
Jack Mallers is weighing in after newly resurfaced Epstein-related files are circulating online, attempting to connect Bitcoin to Jeffrey Epstein. The loudest claim centers on early Blockstream fundraising and an alleged proximity to Epstein through third-party investment channels. Mahler's point was simple and consistent with Bitcoin's design. Bitcoin is a neutral, open-source public utility and does not screen participants, grant favors, or accept influence. One of the names pulled into that narrative was Adam Back, who addressed the claims directly, stating, "In 2014, during Blockstream's seed round investor roadshow, the company was introduced to then MIT Media Lab director Joi Ito. Subsequently, Blockstream met with Jeffrey Epstein, who was described at the time as a limited partner in Ito's fund. That fund later invested a minority stake in Blockstream. A few months later, Ito's fund divested its Blockstream shares due to a potential conflict of interest and other concerns. Blockstream has no direct nor indirect financial connection with Jeffrey Epstein or his estate." Now, that statement aligns with what the documents actually show: brief contact during early fundraising, a minority investment through a third-party fund, and a subsequent divestment. There is no evidence Epstein held governance rights, protocol influence, or any control over Bitcoin development, and former president at Bitcoin Magazine, Mike Germano, is also cutting through the noise with a blunt reminder, saying, "Jeffrey Epstein didn't launder his horrors using Bitcoin. He relied on bank accounts at JP Morgan, Chase, HSBC, and Deutsche Bank to pay for his crimes. But those institutions have elite PR machines working overtime to shift the convo. Never forget who banked him." Now, the documents themselves align with that very explanation, and Jack Mallers weighed in on the broader narrative this week, reinforcing a key point often lost in these discussions by saying, "Bitcoin is a neutral, open-source public utility like fire, water, or the internet. Bitcoin is not a person. It is not an institution. It has no leadership, no gatekeepers, and no permission system." Here's his full response. Listen in.
The last thing I will let happen to humanity is Jeffrey Epstein rob us humans of the invention that is Bitcoin. What is transpired with these email leaks and all of this data leak? Guys, it's very simple. The current system is disgusting. And for the future of our species and the future of our children, we have to fix it. We are battling the battle for human prosperity and the future for our kids. You have disgusting, pedophilic monsters running institutions, governments, countries, making extremely important decisions. We have to burn this existing system to the ground. Listen, we did not have a say in what we inherited. I'm young. I did not have a say in the world I inherited. But I'll be damned if I don't have a say in the world that I build, in the world that my kids inherit. Bitcoin will work. Open source software and distributed systems will prosper. Bitcoin is an open source project, meaning we get to see and audit everything. We can look at the code. If they implemented a backdoor, if they implemented something that was nefarious and malicious and destructive, we'd be able to see it. Bitcoin is a public utility. It's open to the world. And so we can all see it. Bitcoin is well engineered and functioning, and it doesn't matter what emails get leaked. The open source code doesn't change. Was a bad person involved when fire was invented? It doesn't matter. Fire is a utility. People can benefit from fire. How good of a person were the early internet pioneers? Does anyone know? I guess the point is Bitcoin's an open source utility. It's a neutral thing. It doesn't have feelings, emotions, intents. It's just a bunch of code that delivers a very useful utility like water, like fire, like steel. The last thing I will let happen to humanity is Jeffrey Epstein rob us humans of the invention that is Bitcoin. That's the last thing I will do. Fuck these people. If I have to go on CNBC every single day to ensure that the public knows that that guy has nothing to do with the credibility of this invention and how monumental it is for all of us to be living in this time and making use of this technology, I will do that. I will be damned if this guy's emails from a decade ago get in the way of Bitcoin. Bitcoin doesn't give a shit, and neither should anybody else.
Now, for viewers at home, this should matter because narratives shape regulation, public trust, and ultimately who gets held accountable. And the Epstein files expose institutional failures, not a failure of Bitcoin. Bad actors attach themselves to powerful systems all the time. That does not make the system complicit, and it does not change what Bitcoin is. Now, joining me to discuss this story is a longtime voice in the Bitcoin space and someone who's been cutting through the noise around this story, the Epstein story itself. Let's welcome to the show, Mike Germano. Mike, welcome. Happy Wednesday. Thanks for joining us. How are you?
Doing good. Thanks for having me, Hank.
Yeah, the pleasure is all ours. So we got a lot to talk about. In fact, you were even mentioned in this story briefly, Mike. So when these Epstein documents dropped and Bitcoin immediately got pulled into the headlines, what was kind of your initial reaction when you saw how the story was being framed online?
Yeah, so once again, I've spent years in the media landscape, special industry, especially in New York, and you have to really understand when something like this breaks, it's the PR companies that are managing the story for the biggest companies that actually have the budgets to employ them. And usually the person who gets thrown under the bus is the group or the individual that doesn't have the best PR company that is talking behind the scenes with the media, discussing it, trying to navigate the story away from them. And that's exactly what you're seeing. The fact that Bitcoin somehow got brought up into this and that there's a connection is two things. One, it's really not there. I've sat there and fortunate to read hundreds and hundreds of these emails, which is unique because it shows the thinking of how this guy got involved in it, really how he was building relationships. It was the before and then kind of the after of those meetings, not obviously what was in between. But if you really read the emails, you kind of get a bigger story of who was involved, why were they involved, and how Jeffrey Epstein somehow got connected to Bitcoin, right? When we say connected, just like hundreds of millions of people that are connected to Bitcoin in some way, shape, or form, that was the extent of it. And, I'm happy to go over, but in my research, what I found, what he said about Bitcoin, all the record is there where he said, if I could short Bitcoin, I would. It's the deplorables ruples, right? And I would say the saddest thing that I read when researching all this is clearly one woman who was a victim who, because her name was X'd out, at some points emailing saying, hey, how should I invest? I don't really have a lot of money, right? And she was trying to clearly reach out something he cared about. And she goes, should I buy Bitcoin? And he said, no. right? And then and they were like, and by the way, come by, on Tuesday for your scheduled massage. So the worst part was he went from wanting financially to short Bitcoin to then telling his victims who asked, "Hey, is this a good financial advice?" Nah, it's not that. This is, this is someone who really didn't obviously believe in anything in Bitcoin. I'm happy to go over how we got involved between Coinbase and obviously what happened with MIT. And if you look at it, those two organizations aren't getting the heat that they deserve because they have massive PR companies. And then obviously, more importantly, the biggest banks in the world that all banked him. No one's talking about that. Yeah. So if you're not going to own Bitcoin because you think Jeffrey Epstein was part of it, well, then close down your bank account with JP Morgan Chase, the people who funded all these things over the last 20 years.
Right, exactly. Now, I want to kind of start at the beginning of this because there is a lot to unpack and this story seems to keep going deeper and deeper. So really cleanly, for viewers at home who might be hearing about this noise for the very first time, what's maybe the cleanest way to explain how Bitcoin ended up mentioned at all in the Epstein files and why that mention doesn't actually imply influence or control of any kind? Could you kind of break that down for us in the simplest terms?
Sure. So we obviously all know how decentralized Bitcoin is. Not everyone knows that. But being decentralized, there's a lot of groups that participate in it. So there was companies like Blockstream or Coinbase that participated, whether that was an exchange or infrastructure. And then MIT had a division called the Media Lab, which was trying to house and help open source development in a whole bunch of projects. Really, where it looks like Epstein somehow got his hooks in was on the MIT angle and the Media Lab angle. And that's, I think, where a lot of the control Bitcoin narrative has come in, because obviously MIT helped fund some Bitcoin core developers. And looking at all the information, it did not look like I've not been able to see where Joy Ito, who was leading this and had to resign afterwards when MIT did an independent investigation, it wasn't that he was investing in Bitcoin core development. He was using some of Epstein's donations, which his job was to get big donations from everybody on something he cared about, which was the digital currency initiative. There were some meetings, but once again, this was just some people that were contributing to it. This was MIT showing, look, we're on the cutting edge of future, and we're helping support Bitcoin developers. They had no say in what they developed, and that's probably the closest, I think, connection. That's fair to say. And why did that happen? It happened because Bitcoiners were probably excited that MIT was trying to house something like this. Look at this big institution. This kind of shows validity, right? MIT had guardrails. And in fact, in 2008, they said, Jeffrey Epstein cannot donate. He's convicted of a crime. This is not someone we want to donate to our university. Should have been end of story. But once again, Joy Ito found ways to get money, under the table. And once again, he violated what that institution stood for. How blind were they to it? That's where the research, that's where the investigation should happen. Why are we letting one of our most predominant institutions, between that and the former president of Harvard, to meet continuously? The MIT team met hundreds of times with Epstein. Sorry, there was hundreds of emails about their meetings. They met at the ranches, at the islands. They were bringing people, and unfortunately, Epstein invested in Joy Ito's funds, $500,000. Sorry, so they was looking at $5 million in Joy Ito's funds, and that was making some investments. That's the one that made the investments into Blockstream. So really, a lot of this centered around two people. Joy Ito, he was bringing people in to meet with Epstein. And once again, Epstein was doing those investments not because he believed in Bitcoin, but because he needed to give money to institutions to whitewash his credibility. And that was the primary part. I don't even know if he cared if it was cryptocurrency or not, because I don't see that in any of his conversations that he had a real caring or interest in it. He was trying to be aligned with MIT so that he could be still at MIT events, even though MIT said you can't invest, right? Harvard, all these other schools said you couldn't invest. So he needed that credibility with the science and tech crowd. And so he just found a patsy in Joy Ito, who did go, according to this, went to the islands for, not just one day or one meeting at a time, for long periods of time. He found a patsy that was willing to kind of get suckered into whatever they were doing there and continue to give him access and give him credibility. And that's what, Jeffrey Epstein got out of it, and really dragged I think, some really bright minds in the Bitcoin space into it. However, if you look at the emails, there's a series of very smart technical Bitcoin folks that either didn't want to meet directly with Jeffrey Epstein, or they were talking about how Bitcoin should be decentralized, and really scared the shit out of, scared Jeffrey Epstein, and saying, "Oh, I don't want to be around these people," And really, I think the true ethos of what Bitcoin is, if anything, it shows how Bitcoin can't be controlled, and how the powerful people always didn't want to see something like Bitcoin be established.
Yeah, absolutely. And you made the point earlier, Mike, that, Epstein's confirmed financial activity has run through traditional banks and not Bitcoin. And that feels like a real critical distinction that's kind of getting lost in the noise here. So my question to you, Mike, is why do you think that part isn't breaking through as loudly today? Because it seems like the headline's Bitcoin Epstein, but what about banks and Epstein? Like, what do you think is what's missing there for a lot of people?
Chase has a budget of $3 billion for marketing and PR.
There it is.
$3 billion.
Yeah.
Okay.
Is it really as simple as that? Just good PR?
I mean, look, the soapbox I'll stand on is the biggest problem for Bitcoin right now is we do not have a fund for marketing and PR. Right? I'm happy we have the Bitcoin Policy Institute helping to provide some great information. We have unbelievable people that fundraise and facilitate for development in all different ways. We have no investment in the marketing and PR relations that are needed. And look, this is why brands and news media don't know how to talk about Bitcoin. We become this easy target that can't reply back to these, can correct the media. So even worse, you have people like the folks over at Ripple and XRP. They have a huge war chest that they can spend on PR and news. And you're seeing them really push that narrative right now. And a lot of these kind of, I would say, subpar altcoin media outlets that are now trying to draw how Jeffrey Epstein somehow guided the Bitcoin debate against, XRP. And it's obviously laughable to anyone has any form of intelligence. But once again, you can fund and buy spots on some of these crappy crypto outlets. Because XRP's got this, has all these coins that they've been, that they hoard in their foundation to spend for this very moment. So, you're being attacked by all vectors. Chase is happy for this conversation to be somehow about Bitcoin and about someone making like $100,000 donation, not the billions of dollars that, that once again, if you look at these emails, they ask for the routing number and what bank they're going to. Didn't ask for, what their Bitcoin address. I didn't see that one time. So, that's where the conversation should be. That's where people should be held accountable. People should be going to jail at these banks for knowingly banking this. People at MIT, not just Joy Ito, but a lot of other people should absolutely be losing their job. They hurt Bitcoin more than ever imaginable by constantly introducing and validating that this was someone who was worthy of talking to, because look, they're connected to MIT. I mean, I think that anyone should be pulling any Bitcoin activity out of MIT. They've done more damage than they'll ever do good. So, that's a big part of it. And it's because these large institutions have quality PR teams that are either threatening to sue the news if they write a bad story, give them another lead. Because in a lot of these, and once again, I was in the media for a long time. Sadly, a lot of these reporters are willing to write another story, but you got to give them something. So, they're kind of doing this quid pro quo of like, well, should the story go on a different angle? And all of a sudden they keep throwing Bitcoin under the bus, saying, isn't this a better story? Isn't this a better story? And we have no one really to kind of defend ourselves against that. It's great that you had Jack on there, and Jack gave his, passionate way of what he's going to fight for. Well, Jack is one of the few voices that we have that traditional media is turning to. Right. But that's not there's a difference between PR to talk about something positive and PR that kills stories. And really all these other, all these other companies, I mean, truthfully, Coinbase should be in this story a lot more. They should be answering for why they, through Brock Pierce, which was, unfortunately between Joy and Brock, Brock had a lot involved in this, was constantly talking with Epstein, They made investments, and he brought, Coinbase to him. And if you look at the emails, not one time was Jeffrey Epstein really talking about his Coinbase investment. If anything, it was actually their lawyer who would constantly send emails like, wow, this Coinbase thing is taking off. We would have never guessed it. And then a week later, he's saying, if I could short Bitcoin, I would. So it's not like, this is someone who like really, really believed in any of this or had any influence. No emails did he say this is what should happen to Bitcoin or not. And then obviously towards the end, before he was, put in jail for the last time, him and Steve Bannon, I would recommend people read, what was happening with Jeffrey Epstein and Steve Bannon. It's quite funny because obviously Steve Bannon was this like big Bitcoin supporter, and they're talking about, Alter America. They were discussing creating an altcoin called WeCoin, WEE coin, right? And they were like, look, this is how we can go against the establishment. They called it like, for the deplorables, it's the coin for the deplorables. So, not only was he so late, in 2018 to what even cryptocurrency could do, but I mean, it looked like the classic shit coin that you could ever imagine, which would be Steve Bannon and Jeffrey Epstein, doing the We the People. So, it's quite embarrassing, all this. It's a stain because I think it impacted the Bitcoin price. I think the average person's going to say, oh, I'm nervous. Jeffrey Epstein's toxic. What else is going to be unraveled, right? It took us 4 years to get these Epstein files to come out from the government. What else are we going to find? That's the exact narrative. This only helps Chase. This only helps XRP, right? And this only helps, the traditional Federal Reserve banking, apparatus. So it supports everything that Jeffrey Epstein stood for and was connected with, and hurts Bitcoin, which was ironically something that Jeffrey Epstein numerous times said, didn't understand, hated, wasn't willing to go to jail for it, and thought it should be taxed. He was everything that was against Bitcoin. And the only reason why I invested in it is because he found two patsies that were willing to take his money and help whitewash his image.
Yeah. Man, that's wild stuff. And it's crazy to hear about this WeCoin. For me, that just sounds like the prelude to that Trump coin garbage, which also kind of co-opted Bitcoin a little bit just because it was like a crypto and people throw those into the same bucket, even though you and I know they're very different things. But as you mentioned, Bitcoin now more than ever really seems to need some good PR. And Mahler's came out, he did his thing. He framed Bitcoin as a neutral public utility and that ideas keep coming. So how important, Mike, is it for people to understand that, Bitcoin doesn't have gatekeepers who can approve or deny participation and that it's totally neutral? And is there a way we should be going about as Bitcoiners to get that message out? Because it seems to still be lost on a lot of the public right now.
Yeah, look, especially my time at Bitcoin Magazine, I think that this was always a difficult problem for not only us to attack, but for the industry to support, because Bitcoin Magazine had a pretty good voice of talking about, Bitcoin, but it was still a private company that, had a conference and it had some of its business objectives. So, but yet traditional media outlets would turn to Bitcoin Magazine or the Bitcoin conference and say, oh, do you speak for Bitcoin? It was always hard to have these conversations like, well, we don't speak for Bitcoin, we're just Bitcoiners, right? And that became it really became difficult for moments like this. It really became hard. Look, obviously the power of everything we have is because it's decentralized. That's the good news, right? We don't have the CEO of Bitcoin on the island, right? So we'll never have that. But if you look at what they then do, is that's why they're attacking Adam Back. So we almost have these moments now where Adam, it wasn't Adam Back, it was Austin Hill, the other co-founder of Blockstream, who looked like he spent a lot more time through these emails. I'm yet to see Adam Back going back and forth. But he's the one to attack because he's the closest to kind of Bitcoin's foundation, right? So he's listed in the white paper, and now all of a sudden he becomes a target for not just, okay, we're gonna go after Bitcoin, we have to destroy his reputation because that's going to impact that will have a positive impact in hurting Bitcoin's reputation, right? So we don't have a centralized way of talking to the media, of someone who's kind of pushing back, or even to be honest, where are the groups that can sit there and truthfully go through all these emails and document, hey, this is not where the story lines up, or here are the facts, and provide that to press outlets and be trusted for that. So, to me, I think it's we have an issue where we're just currently talking to people that are in the space, right? We're not talking to the normie core or pre-coiner audience, right? That's where we lose everybody.
Right.
All the conversation we have are for the people been, who work in the space, who are involved in it. We're fighting over the littlest things. Great, fine, that's terrific. But the outside world that doesn't really even know about Bitcoin might see the brand a couple of times or know that Trump supported it. This is a very complex topic to talk about. And what's happening is we have exchanges that just do all their advertising to sell, hey, this is how you can participate in the ecosystem. But it's not just the education, it's actually the response back to the media and the community that any other business would have a PR company that could be able to address this and provide information on the record or off the record to press. We just don't have that. And that's really where, when we think about these decentralized networks, there's still people playing a traditional game, and traditional media and PR still exists, and it drives the conversation. And it's going to get on the biggest shows, and we're going to become the joke of some late night joke because no one's there to defend it, no one's there to correct it. And that's really where I think we're at a huge risk as a movement, is that we don't yet even identify the people or the information that can best be delivered to traditional press to help really correct these false narratives.
Yeah, no, you're so right. And, we've seen it throughout Bitcoin's history. It's kind of like people blame fire for the actions of an arsonist, right? Like we saw it with the Silk Road. Everyone's like, oh, Bitcoin was part of that. Bitcoin must inherently be bad. But that's just not how this works. And, this particular case is interesting, I think, because it's one of those unique moments where Bitcoin's openness kind of feels like a bit of a liability in terms of public perception, even though it's strength in practice. Like, how do you see that disconnect right now? And how do we communicate that to the masses so they can understand like how important and vital Bitcoin really is to the future of our monetary system?
Yeah. Well, I think you hit the nail on the head, which is our decentralized nature. This is one of the few times that it looks like it's a negative because of the way that anyone being able to be leaderless and not a gatekeeper, anyone getting involved now, Jeffrey Epstein will go down as the most toxic person, of the last decade, obviously, if not more. I mean, he's gonna be a symbol for this forever, and they're gonna use him to, throw his name on onto different causes and try to completely discredit it. And now we're going to forever have this stain on us unless we provide better information on what accurately happened and why that's not the case. It's striking because why does all the people that worked at Chase that talk to Jeffrey Epstein all the time, why is Chase not getting that same issue? Or people within different literally presidential administrations that we're talking, or the president of Harvard who was constantly meeting, or the prime minister of Israel, right? Why are they not getting that same attention that Bitcoin's going to get for somebody who wasn't involved? Now, the positive being is, if we're hearing that Jeffrey Epstein was such a bad guy and influenced all these things, at the end of the day, even giving money to Bitcoin, he influenced nothing. He didn't change anything. So the best part was, he didn't have any knowledge in tech. He obviously had some, financial knowledge, but was completely behind the curve, because it's funny, as you've seen some emails, he's like, well, rug pulls, I don't want to do anything illegal. That would be horrible. I don't want to go to jail for that. Like, he didn't want to go to jail for like hurting the U.S. financial system, but he has no problem hurting children. So, it's kind of funny where his morals are, but, he didn't do anything to influence Bitcoin. I think maybe hopefully that shows the power of the decentralized side of this, is that he didn't get to show up and say, hey, we should, allow this to happen. He was like, I don't like the fact that it's got a ledger that's open. Well, it didn't matter. It didn't matter what he said or who he knew. And so that shows the power of that one person can't come in and be a gatekeeper. But unfortunately, when the press and media wants to make this a story against Bitcoin, we just have nothing to defend against it.
Right. Did he actually complain about the open ledger? Because that's pretty hilarious, given like, how tight he was with his flight log. So no, he doesn't like the open ledger there. It's not that big of a surprise.
Yeah, well, so I think my wife made me stop reading the Epstein articles. I think it's been like 4 days of me just like sitting up my office reading it, and she like keeps bringing sandwiches in, and she needs to say like, "Honey, you need to take a break." But as I've been reading all these, you kind of really go down the rabbit hole, and whether he looked at essentially like didn't like the tax ramifications. I haven't posted this yet, and I haven't seen anyone post it yet, but he does have this like really creepy eyes wide shut analogy to Bitcoin that I just read that I like had to immediately like take 2 showers because it felt gross of how he compared his how he play, compares crypto to his Italian friends, which is there's a masquerade ball and all the participants can watch and count as persons in distinct costumes get a kiss from someone else. Everyone is a witness to the kiss. When asked, each person can say the person is that particular costume, and they got to know how many number of kisses they have. There's video taken from the ball, and everyone's in it. Kiss is like a Bitcoin. It doesn't really exist as a thing, but everyone in the room can then verify how many you've gotten. The video of the event is the open ledger, and everyone can download and review that video file for false claims. No one knows who's actually in each costume, but all the video of each can put together the precise date and time and how much kisses and values they got in exchange for other things. Like,
Wow.
That's so creepy and weird. And like on top of it, like you immediately thought Bitcoin is like eyes wide shut. Yes, yes. So like, this I think just ties in, how evil people will always think evil things, no matter how pure intentions, Bitcoin or anything else can be. So that one I read, I was like, he just like really wasn't big into the open ledger part of it. From all his comments, but it's weird how many conversations he has about this and can't get over. He's like, well, the banking system's awesome. He's like, that is great. We can find ways to work within the banking system. And that was his key. He's like, we can work within the banking system. This is how we send money to this, and this is how we create this charity. But he was a pretty big fan of the traditional banking system.
Wow. Hearing that analogy to Bitcoin and the eyes wide shut dance makes me want to take a scalding hot shower. I've never seen someone make Bitcoin sound so disgusting so quickly, but he did it. Yes. Jesus, Mary Joseph. And, aside from that, there's an interesting timing element to this that can't be ignored. We have Bitcoin has been becoming more and more mainstream and politically visible, especially in the last year. So my question for you, Mike, is, do stories like this maybe gain traction in today's world simply because Bitcoin matters more now? Like, is it almost maybe a good thing in a weird way that Bitcoin's brought up in this, in the sense that it's showing how mainstream and ever present it really is becoming? Or is this still a net negative because it's associated to Jeffrey Epstein? I'm trying to find the bright side of this here. What are your thoughts?
Yeah. So unfortunately, I think a big part of this is because Donald Trump is the president. Obviously, they could release the Epstein files 4 years ago during Biden. They didn't at all. No one for the media called for it. It wasn't until Trump got in office that they asked, that they pressured to do this. I'm happy they did. There's invasion of a lot of people's privacies who were probably pretty innocent, but I think that this is an important thing to showcase to kind of get more credibility back. But the truth is, the last election cycle, I would say we're fortunate Trump did get elected, who was positive for Bitcoin in the crypto industry. The negative is it really made Bitcoin a little bit more political than it has ever been. And the media obviously is going to use everything they can against Trump and Jeffrey Epstein and sell that together. And now if they can drag in Bitcoin to it, it's even better. It's like, look, Jeffrey Epstein helped build up Bitcoin and Trump really supports it now. So we're unfortunately now in a political news cycle because we're being connected together. That isn't going to be that's not a positive to the overall reputation of Bitcoin among people who don't currently own it and need to make that decision. So we're hurting ourselves in kind of attracting new users and new customers because it all automatically looks like, who would want to ever be connected to anything that Jeffrey Epstein's connected with. So unfortunately, it's a political conversation. And since, the wagon was a little, very much hitched to Donald Trump, the Republicans, from a narrative PR standpoint, not from, once again, not from a Bitcoin side. Everyone has a right to get involved. I think that this is going to create a lot more chaos in the press and media. It's going to continue to have that conversation, and the worst thing that could ever happen is when they talk about Bitcoin, like Bitcoin, the cryptocurrency that Jeffrey Epstein invested in. Like, we can't have that be the add-on to every story. So
Yeah.
if you're asking, does this make us look like we're bigger than we really are, or bigger? Does it make it look how connected we are? I think in this case, usually they say all press is good press. I think in this scenario that this is so toxic that's not the case. And unless we start to, unless there's like a white paper report of where Jeffrey Epstein was involved in anything Bitcoin, but where he truly stood, that we could be providing to the press or pushing out there, maybe working with, traditional press media outlets that might not typically like the New York Times or something like that, that have some credibility if they want to actually, look into the truth. Until then, I think that, we're going to be up to the XRP army spreading lies, and then press getting excited to just bash Bitcoin, who never liked it anyway. We're going to be at their mercy.
Yeah. Yeah, from a press perspective, it kind of makes me think like it's really an unholy triumvirate of buzzwords that, of course, they would want to stick together, right? Like Trump, Epstein, Bitcoin. It's like a multiplier effect if you can get a story that involves all three of those. But with that being said, we have seen some unfavorable things happen in the crypto and Bitcoin universe before. Of course, I'm thinking of like the FTX disaster comes to mind. So when you think of things we've seen like that in the past, and then we see something that's simply Bitcoin being attached to somebody like Jeffrey Epstein, how do you think those two instances differ in terms of the viewpoint they give the public? Like, is an FTX collapse a worse thing for the Bitcoin narrative, or is simply being associated to Jeffrey Epstein in the same breath even worse for it? Because we've endured these types of situations before, and Bitcoin always comes back stronger than ever. Is this just another case of that, or is this maybe a new wrinkle to Bitcoin's, storyline?
The reason why this is so damaging, look, FTX collapsing was bad. People lost money. But at the end of the day, wow, Bitcoin kept going on, right? And it was what seemed like some nerdy kid unchecked overspending or not the right financial regulations, fine. Jeffrey Epstein molested children. There's nothing worse in the world than that. And that is something that you can't, if some rich people lose money because an exchange goes down, hey, that's part of capitalism. If you lost some money, hey, this is why you should have held on to Bitcoin in cold storage. Don't trust banks to begin with. This person was the devil. And so any kind of connection to that, and especially ones that are untrue, it just the more that just the normie core person is going to be reading these articles and seeing Bitcoin, in this same conversation, it creates the battle for us so much worse. So I look, I'm the most positive guy. For people who know me, I'm a super positive guy. I'm always like pro Bitcoin. I think we're good. I think that this is as a major negative, is going to be a major stain that we don't deserve, and we need to figure out a way to change that conversation.
Yeah, no, that makes a lot of sense. And I wonder, from like a regulatory standpoint, do narratives like this, do you feel they risk shaping policy maybe in ways that aren't grounded in facts, even when like the underlying technology wasn't involved? It makes me feel a little bit akin to the samurai wallet thing where we're punishing developers. What are your thoughts on that? Do you think this could end up having ramifications down the line for Bitcoin policy, maybe in ways we're not thinking about right now?
Well, I think that the one negative ramification would be if other groups wanted to, know your customer has always been a battle we've had in Bitcoin, but I guess know your influencer, know your donor. Does that all of a sudden something that comes into all this? What I'm probably more pissed about is, when I looked at artwork that Beeple came out with yesterday, where it shows, Satoshi mask being lifted and Jeffrey Epstein's face crying beneath it. And, this this ridiculous story that Satoshi was Jeffrey Epstein. This is the type of conversation. This is the type of articles that are so untrue and really absolutely hurt the movement. It's quite disgusting. So, I do think it's a big problem that we need to do our best to address that. But I saw that and I just thought how much that's where it's always been a positive where we don't know who Satoshi is. It's always been a beautiful part of the story. For what we're seeing now, it's for people that are really don't want to hurt Bitcoin, that they can now just take these evil people and connect it to something as beautiful as Satoshi's given us. So that one I think really frustrated me because there's no evidence towards that. And if anything, this needs to be a litmus test for people in the crypto industry, that if they're really, without any evidence and in fact against it, trying to hurt Bitcoin, these are the names that I won't forget. And I don't think we should ever work with again.
Yeah, no, I mean, you attach Epstein to Bitcoin, and that's a real poison pill in that well, and I think anybody can agree with that, and you've made that point pretty clear. But, for everyday viewers out there, Mike, who don't live on crypto Twitter, what do you think's the one thing they should be keeping in mind when they see Bitcoin dragged into stories like this?
It's that Bitcoin is everywhere, and Bitcoin is for everyone, and the positive is they weren't talking about anything else because nothing else mattered. So I think maybe the XRP army is mad because no one even mentioned XRP. I'm sure if they could have got on the island, they would have. But once again, you're seeing people like Larry Summers or sadly Reid Hoffman or LinkedIn Fat Guy. They were constantly sending articles about, hey, this is why we believe in Bitcoin, or this is what we're doing. And the truth was, if anything, it shows, look how much there's been prominent people since 2014 that have believed in Bitcoin and really the groundwork it's taken for us to be here. It wasn't just like this happened, this, 100K we got in the last year. There have been a lot of people that have had to put their, name and reputation on the line and build it up. And you could see it in kind of all different parts of this conversation. So this is unique. We got the one power broker, look at their emails of how people talk, but this is conversations we've all had. We've all had the same conversations with people. If you opened up, my emails, what would you see? But you'd see me talking about Bitcoin for years, trying to convince people. And so there was a lot of people trying to convince Epstein Bitcoin was good, that had nothing to do with Island or anything else like that. But the good news is we should look at the perk, which is there was a lot of advocates for it, and you got to be careful who you partner with them, man. Don't trust verify, especially if they have a criminal record and went to jail. That's not something to do business with.
Yeah, no, I think that's good common sense for everybody to take note of in everything they do. If a guy has been to jail, maybe think twice about doing business with them. Well, Mike, I got to say, it's been an absolute treat having you on the show with us today. So I really appreciate you joining us and sharing your insight and expertise. And I'm sure you've at least gained a couple of new fans this morning. So for those of our audience out there that haven't had a chance to check you out, is there a good place they can go to see what you're up to, what you're musing about? Maybe you're tweeting about something or other. What's the best place I can send them to learn more about everything that you're doing in the Bitcoin space?
Number one, I appreciate that. But number two, I want to start with, I appreciate what Roxom's doing. Look, live content's important, getting voices out there. I know this is a big investment by your team, and not just in resources, but in time. But, I think that Bitcoin and our industry is thankful for all this. So number one, thank you guys for doing all this. Two, Twitter or X, at Mike Germano, which is my name. I was on it before Bitcoin Twitter. So when you actually used your real name, still been using it. That's the best place. I'm working on a stealth startup, which will be launching soon. So, I'm kind of being a little bit quiet in the last couple of months, but I'm excited to do that and try to help the entire Bitcoin space. So follow me there, and that's where you'll get a lot of my, and maybe some crazy posts about Epstein coming up as I uncover some more of the stuff. But that'll be a good place to chat. Yeah.
I can't wait. I followed you this morning, so I'll be awaiting with bated breath. And when you're out of stealth mode, please let us know. We'd love to announce anything you got going on here on the show. We'd love to have you back again. So thank you so much for your time this Wednesday, and enjoy the rest of your week, Mike. It's been a treat.
Take care, guys. Thanks. Bye.
Cheers. Thanks. All right, we're taking a quick break here at RoxomTV News, but when we're back, we're going to be finishing up our first hour and then making our way into our second hour of today's show with more top news stories coming your way. So stay tuned. RoxomTV News will be back after this.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to RoxomTV News. Our next story takes place inside Iran's closed financial system, where sanctions and capital controls limit access to global banking, and new data is revealing how money is still finding a way to move. According to an exclusive Reuters report, blockchain activity tied to Iran surged in 2025 as citizens and businesses increasingly turned to Bitcoin and crypto to navigate economic pressure. On-chain analysts estimate between $7.8 and $10 billion in Bitcoin and crypto value flowed through Iran-linked channels just last year. Now, that activity has historically increased during periods of inflation and currency stress, and the Iranian rial remains under sustained pressure. Now, Bitcoin appears to be the primary tool for everyday users. Data shows repeated surges in Bitcoin withdrawals from local exchanges into self-custody wallets, behavior typically associated with long-term holding rather than short-term speculation. Analysts say that Bitcoin is increasingly being used as a store of value and as a censorship-resistant financial rail. Alongside Bitcoin, US dollar-pegged stablecoins like USDT also play a role, particularly for larger transfers and cross-border settlements. Now, researchers report that hundreds of millions of dollars in USDT tied to Iran-associated wallets in 2025, often linked to trade or institutional-style activity. Beyond exchanges, Iranian users are also pointing to peer-to-peer tools that operate outside traditional banking and even outside the internet itself. One example is BitChat, a Bitcoin-enabled messaging app that uses Bluetooth mesh networking, which we've covered previously on the show. Those tools appeal in environments where financial surveillance is high and platform access can disappear quickly. And for those of you at home, this should matter because it shows how alternative financial systems emerge under pressure. And when access to banking breaks down, people look for systems that continue to function regardless of borders or permissions. We're taking a break here at RoxomTV News, but when we're back, we're getting into the second hour of today's show with more of the day's top stories, and we'll be joined in just a bit by our second special guest of the day to break it all down. Stay tuned. RoxomTV News coming back at you right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card, buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee, and right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. Our top story of the second hour of today's program takes place across the waters of the Arabian Sea and inside back-channel meeting rooms in Oman, as the United States and Iran are testing whether diplomacy can still outrun the risk of a military mistake. You see, according to Reuters, U.S. and Iranian officials are preparing to hold nuclear talks in Oman this week aimed at lowering tensions that have been climbing steadily across the Gulf. Iran requested the change in venue from Turkey to Oman in order to keep the discussions narrowly focused and strictly bilateral. Now, Tehran wants the talks limited to its nuclear program and has drawn a firm line around its missile capabilities and regional influence, which it says are not negotiable. Washington has pushed for a broader deal, demanding restrictions on missiles, zero uranium enrichment, and an end to support for regional armed groups. So far, Iran has rejected those terms, though some officials have hinted at flexibility on enrichment levels if talks proceed without preconditions. Now, all of this is unfolding against a tense military backdrop, as earlier this week, the U.S. military shot down an Iranian Shahed-139 drone after it approached the USS Abraham Lincoln aircraft carrier in what U.S. officials described as an aggressive maneuver. The drone was destroyed by an F-35 fighter jet and no injuries were reported, but the timing is hard to ignore. You see, the shootdown happened as diplomats were finalizing plans for the Oman talks, highlighting how quickly routine encounters can escalate. Reuters reports the incident followed warnings from Donald Trump, who said bad things could happen if a nuclear agreement is not reached. That same day, Iranian Revolutionary Guard boats approached a U.S.-flagged tanker at high speed in the Strait of Hormuz, prompting a U.S. Navy escort and pushing oil prices higher. Inside Iran, officials are increasingly concerned that a direct clash with the United States could destabilize the country and reignite widespread unrest after recent crackdowns on protests. Several current and former Iranian officials told Reuters that avoiding war is now the priority, even if it means limited nuclear negotiations to ease pressure. Now, for viewers at home, this should matter to you too, because the Strait of Hormuz is a critical artery for global energy supplies. Even small confrontations in this region can translate into higher fuel costs, market volatility, and broader economic shockwaves. The next few days will show whether the Oman talks create breathing room or whether this fragile balance between diplomacy and deterrence continues to hold by a thread. And as the clock runs out in Washington and Moscow, a cornerstone of nuclear restraint quietly disappears. You see, the new Strategic Arms Reduction Treaty, known as START, has expired with no replacement in place, ending the last legally binding limit on U.S. and Russian nuclear arsenals. You see, for nearly 2 decades, the treaty capped deployed strategic warheads at 1,550 each and allowed inspections and data exchanges. Those verification measures had already weakened in recent years as relations deteriorated. Russia suspended participation in key mechanisms, and negotiations on a successor never quite gained traction. Now, as the deadline approached, Russian officials suggested observing existing limits informally for another year, but Washington made no formal commitment and no agreement ever followed. With new START gone, both countries are no longer bound by numerical ceilings or verification rules. And security analysts warn this increases the risk of miscalculation, worst-case planning, and competitive modernization of nuclear forces. The expiration also complicates a global picture already shifting due to China's expanding nuclear capabilities, which were never covered by the treaty. Now, religious leaders, including Pope Leo, have urged renewed arms control efforts, underscoring broader concern about rising existential risks. And beyond warhead counts, the treaty's lapse represents the dismantling of a framework that reduced uncertainty during crises. And without inspections and transparency, nations rely more heavily on intelligence estimates and signaling, which can harden assumptions and shorten decision timelines. And for those of you at home, this should matter because arms control affects long-term global stability, defense spending, and crisis escalation risks. The absence of formal limits does not guarantee an arms race, but it removes guardrails that once helped prevent one. Our next story is taking place on the trading floors from New York to London as investors are rethinking assumptions that once looked rock solid. Software, data analytics, and professional services stocks have slid sharply as markets reassess growth models in the age of artificial intelligence. Now, the immediate catalyst was Anthropic's launch of new automation plugins for its Claude Cowork agent, which can perform tasks across legal, sales, marketing, and data analysis. Now, that announcement sparked fears that AI could undercut entire categories of billable work, once thought insulated from disruption. Investors, well, they responded quickly. On Wednesday, analytics and services stocks posted some of their steepest declines in years. Shares of Thomson Reuters dropped nearly 18%. LegalZoom fell close to 20%. And FactSet and Morningstar logged double-digit losses themselves. Advertising groups like Publicis and Omnicom were also hit as automation threatens traditional ad tech economics. And U.S. markets extended the sell-off, while European firms such as RELX, Wolters Kluwer, and the London Stock Exchange Group followed even lower themselves. Now, this repricing builds on a deeper shift that's already been underway. Years of low interest rates pushed investors toward gross assets with far-off profits, rewarding subscription-based software models with high valuations. Now, as rates rose and growth slowed, those long-duration cash flows became more sensitive to risk. And AI accelerates that reckoning by calling into question pricing power and revenue certainties. For those of you at home, this should matter because it reshapes where capital flows, which jobs face automation, pressure, and how markets value future growth. The easy money era masked fragility. AI is now forcing it into the open. We're taking a break here at RoxomTV News, but when we're back, we're going to be jumping in with some more of our top Bitcoin stories of the day that we'll be discussing with our special guest of today's second hour. So stay tuned. More RoxomTV News coming your way after this. Welcome back to RoxomTV News. We're joined by our second guest today for our second hour of today's show. He's an on-chain analyst and on-chain and cycle analyst in the Bitcoin space. Please welcome to the show, The Rational Root. Root, great to have you on. Thanks for joining us today.
Thank you so much for having me. Great to be here.
I love the carrot look. It's a new one. I'm excited to have you on the show, Root. Our next couple of stories are actually based on a couple of recent pieces that you published on Substack, and we're excited to dig into the data and the thinking behind them as well. So are you ready to get started? We'll read the story and then chat about it?
Yeah, let's go.
All right, Root, we're getting started. So across global markets right now, capital is making a very clear short-term choice. Gold is acting like the safe haven of the moment, while Bitcoin is doing something far less dramatic. In his latest on-chain analysis, Root lays out why this divergence matters and why it may not be as alarming as it looks on the surface. Now, the backdrop here is a fragile macro environment. Trust in fiat currencies has softened, the US dollar has lost some momentum, and geopolitical risk remains elevated. That combination has pushed capital toward traditional safety, especially gold. Gold's 12-month relative strength index is now at levels not seen in more than 50 years, a signal historically associated with late cycle or bubble-like behavior. That move is being driven by sanctions risks, geopolitical uncertainty, and growing discomfort with U.S. treasuries as a risk-free asset. Bitcoin, however, despite being built for moments like this, is not acting like a classic safe haven yet. Instead, it continues to trade more like a risk asset grouped with tech exposure as capital concentrates in metals and artificial intelligence narratives. Root's takeaway is not that Bitcoin has failed, it's that Bitcoin is still early in its adoption curve. And this is the first cycle where Bitcoin is becoming an institutional grade asset, even after delivering the most successful ETF launch in history. In his framework, gold may still have room to run, with scenarios that push toward $20,000 an ounce, while Bitcoin's long-term upside remains far larger, potentially stretching toward $1 million per coin. For those of you at home, this is something worth paying attention to because this resets expectations. Gold having its moment does not mean Bitcoin missed its moment. It means patience may be required before Bitcoin's role as a macro asset fully clicks. All right, we're bringing Root back. Root, when people look at gold ripping higher and Bitcoin basically treading water, it feels a little counterintuitive. So at a high level, why do you think capital is choosing the old safe haven before the new one right now? What's your beat on this?
Yeah, so basically, gold has been functioning as a safe haven and Bitcoin as a risk asset. And actually, I've laid out already last year, the whole last year, I've been talking about how Bitcoin was still treated as a risk asset and not a safe haven. We see that clearly in the past behavior, not even the current move on gold, but just previously, the correlation with gold was always low, and with risk assets, it was extremely high. And so that is really nothing new. Institutions are actually only getting their feet wet, and so we cannot expect institutions to treat Bitcoin as a safe haven yet when they still don't really actually understand what it actually is. They're now starting to add like a small percentage of their portfolio. And that's a good thing. They're getting their feet wet, but we're still early. Bitcoin is still a teenager, and we don't have the maturity as gold. And the reason why gold is going so parabolic is because countries like China, India, they're buying gold, and basically on a loss of faith in the U.S. dollar. After the sanctions on Russia, the U.S. dollar lost a bit of trust. And so gold has been, in an uptrend ever since, and actually already before, but even more so after that, and it has continued. And gold is now at a 50-year high if you look at the 12-month RSI. So actually, since the start of the fiat system, gold is now having its moment, and Bitcoin is still not. And I think that is totally fine. We're now in the phase where Bitcoin is still seen as a speculative asset. It's still a risk asset because Bitcoin has been very volatile. Now gold is making a volatile up move, of course, and so the Bitcoiners are coming out like, okay, gold is more volatile than Bitcoin. But historically, for the past years, Bitcoin was definitely the more volatile asset. And so I think it's very normal that institutions don't have the trust yet. So there's countries like El Salvador who are very early, who are making these steps, and they're looking as Bitcoin as a hedge. But those are really exceptions. So I think the great majority of institutions is only starting to allocate to Bitcoin. And so Bitcoin's moment will come. I think actually gold's move currently shows only how much Bitcoin's potential is.
Mm-hmm. Yeah, these are interesting times we're experiencing right now, Root. And, for everyday investors out there that are watching this and they're wondering if Bitcoin is failing this test right now, because obviously, Bitcoin doesn't do what we think it does, and all the doomsdayers come out and say Bitcoin is dead again. What do you think those people are misunderstanding about where Bitcoin actually is in its life cycle right now? You mentioned we're early. Is it really as simple as that, and people just need to be a little more patient? We've gone from, pennies on the dollar to six figures in a matter of about 16 years. So does everyone just need to kind of cool their jets and be patient right now? Is that kind of how you're feeling?
Yeah, so of course we've had several cycles now in Bitcoin. Bitcoin has been moving in this 4-year cycle pattern. And so there's a lot of people that made a lot of gains in those early days. They actually basically made the right bet, and they are still at these price levels, even in large profits, right? And so this cycle was actually the first cycle that we saw a bit less of retail interest into Bitcoin. It was more a gradual institutional adoption. And so retail was kind of distracted a bit. Also by AI. There was a lot of innovation in AI happening, especially with LLMs during this cycle, and so I think a lot of retail hype was chasing that instead of Bitcoin this time, and that parallel with what's happening in the fiat system in general with gold's rally, that even pulled away more hype from Bitcoin and distraction from Bitcoin, and so Bitcoin hasn't been as attractive in this cycle as it was in previous cycles, but we saw a 3-year uptrend. And there was gradual institutional adoption, measurably. I've been covering that for the whole year. And so I think that's very normal. We're still following this parallel law trend, which is a natural trend of adoption, like similar to the curve of the internet. And so that is all happening. And this time, what was missing basically was only the parabolic upside towards the end of a cycle. We didn't get that blow of top, which traditionally Bitcoin has had, and so I think that was a disappointment for many. But to be fair, that a blow of top is never a sustainable move, and Bitcoin always comes down after that. And so this time, I think the downside risk is much more limited. So in previous cycles, we saw bear markets of perhaps like an 80% drop. This time, I don't think we'll reach even 60. So there's limited downside, and I think the cycle will just continue from here. Bitcoin, and as I said, just gold's rally actually shows Bitcoin's potential. So there's a big need for Bitcoin, and I think so it will grow, and Bitcoin's momentum will come back. It might take some time though.
Yeah, we definitely don't have the kind of Bitcoin echo chamber hype cycle that we experienced during the COVID ages. As I've mentioned on the show before, it was just kind of a perfect storm of, you had the gamification of, trading through Robinhood, and then everybody got free money, and they're like, and the TikTok was emerging. So it was this perfect hype cycle that really seemed to encapsulate the last Bitcoin cycle that we experienced. And this one has been far different from that. And a good point that you made was that AI has kind of stolen some of that thunder. Everybody's always looking for what's the quick new way to hop on a train that's going to make you a quick buck, and it went from crypto and Bitcoin to AI, and we've certainly seen that as a result of the lack of retail participation in the last year or so. But I want to move now on to kind of the on-chain and cycle perspective here. So Root, what signals are telling you right now that Bitcoin is still early as an institutional asset, even after the ETF launched, everyone keeps pointing to as a massive success? Like, is it just we haven't seen any of the Mag 7 really come out aside from Tesla in the past buying Bitcoin? Like, what does that next institutional cycle look like? Is that the real big players jumping in the space and starting to put Bitcoin on their balance books and not just the strategies and metaplanets of the space?
I think, so I've been measuring institutional adoption through the 13F filings, and we can clearly a trend there. So there's actually every quarter, there's new companies allocating to Bitcoin, and the percentage of their portfolio is growing as well. And so I think that is actually the only thing we need. I would like to convince Gen Z to get into Bitcoin. They need it the most. But the truth is that, Bitcoin is a store of value primarily. And most value is stored with institutions and governments and countries. So it's logical that capital is looking for Bitcoin, and we're still in the early moments. As I said, there's like small percentage allocations from these firms. But that is actually a growing trend, and that is measurably. And so I think that will continue into the next cycle. And so once, these institutions, for many of these institutions, it's the first cycle. So imagine just as any newbie getting to Bitcoin, and, they're buying some Bitcoin on an exchange. I think what we're going to see gradually is that some of the institutions might even start doing self-custody at some point, and might start to follow the Bitcoin ethos. Now, ETFs are obviously the easy gateway into Bitcoin. And so it's logical, just like an exchange is the easy gateway for any newbie to Bitcoin. And so I don't think we can blame any institution for any wrongdoing here. I think I think actually the momentum we have with institutional adoption is good, and it's growing, and that's clear from the trend. And even on this, we have to move through a bear market. But once Bitcoin starts bottoming out, and it starts actually to become very attractive as an asset compared to anything that's currently overvalued, equities, gold, real estate, they're all at super high values. And so Bitcoin is going to look at some moments very attractive, and momentum is going to come back, and then everyone is going to start chasing Bitcoin again.
Yeah, and I think that's a big thing, especially on the institutional front, where that narrative keeps shifting, because as we've mentioned and you mentioned previously, people are still seeing Bitcoin akin to a tech stock as opposed to a store of value or a safe haven asset. So my question for you, Root, is in your framework, what would you expect to see change in the data before Bitcoin starts behaving less like a risk asset and more like the macro hedge people are always talking about? What would you need to see change to kind of confirm that transition is taking place?
Yeah, currently there's a very high correlation with risk assets. So, for example, Bitcoin, the S&P, and NASDAQ are super correlated. And so I would like to see more correlation towards gold. But even Bitcoin is not going to never correlate like extremely high to gold, because Bitcoin is more of a positive innovation. Gold is like this safe haven asset where there's now like a lot of uncertainty in the world. in macro landscape, there, basically we have wars, we have so much uncertainty around, U.S. treasuries, and so it's a lot. People their flight is to gold, but Bitcoin is more about a revolution. It's about like a new monetary system, and it's more like an optimism rather than pessimism, which I like to, gold is more of a pessimistic move, and Bitcoin is more in that sense. It's indeed more treated like a tech stock. It has more this optimism with it, and so. What I think is going to happen is that Bitcoin will still continue for the next cycle to trade more like a tech stock. But momentum is going to come back, and we still need to get a bigger market size for Bitcoin. We barely reached like 2 trillion in market cap, but that's gold is still 10 times bigger, right? And so we still need to gain some ground before Bitcoin really can take off as an inflation hedge. And I think that's a natural transition. This is only the first cycle that actually we have more integration with the TradFi system, and so it's only normal that we're still seeing as a risky bet. And so we still need some of that. People need to undergo one of those cycles of Bitcoin to better understand it and learn about the ethos and learn actually about the tech before they can start treating it as more like the Bitcoin maxis are doing, which are treating it more like a savings account, right? And so I think that is going to grow over time, and so I think there's nothing to worry about. Bitcoin will continue its trend, and I think Bitcoin has a long road ahead to $1 million with a lot of volatility still to come. But what I would like to see is less correlation with risk assets over time and more correlation towards hard assets like gold.
Yeah, no, I think we both would enjoy that correlation a little better, especially in today's, right now. But that does speak to kind of what we're going to talk about in our next story here, which is also regarding another story that you wrote about. So hang 10 Root, we're going to be back with you in just a second, because on Bitcoin's own price chart, the tone has shifted noticeably in recent weeks. In another recent piece, Root made the case that the market may need to take the downside more seriously than it has so far. You see, Bitcoin was rejected at the lower end of a major resistance zone, briefly pushing toward $97.9 thousand before rolling over. Now, that kind of failed breakout often signals underlying weakness rather than strength. Now, at the time, Root noted that a bullish continuation was still possible, but on-chain behavior was starting to change. Several indicators began to resemble early bear market structures rather than a routine mid-cycle pullback. That shift lined up with increasingly negative sentiment across X, reinforcing caution rather than contradicting it. Root's framework is intentionally disciplined. Until key levels are reclaimed, Bitcoin should be treated as if it's in a bear market. As he puts it, if it walks like a bear and growls like a bear, it's probably a bear. That does not mean the outcome is necessarily locked in, as the analysis leaves room for Bitcoin to invalidate the bear case, but only through price action and on-chain confirmations. For audiences at home, this matters because it reframes risk management. The next move from Bitcoin will determine whether this is a deeper trend or a temporary detour. We're bringing Root back. Root, the phrase, the bear case is building, certainly gets people's attention quickly. So when you say that, what are you reacting to most? The price action, sentiment, or maybe something deeper? Let us know your thoughts.
Yeah, it was mainly the on-chain indicators. So several on-chain indicators, like if you look at short-term profit, the chart I shared on Twitter just now, actually, and there you can see clearly that the structure is starting to imitate previous bear markets. And so several on-chain indicators. Also, if you look at capital flows, on-chain, we started seeing like a similar pattern that we have seen with previous bear markets. And so of course, there's always some contradictory evidence. There's some no indicator is perfect. So it's like the confluence of several of the indicators started to actually show that the bear case was the more likely move forward. And so I shared this newsletter was from 2 weeks ago, before actually the drop towards now 73K, which we're currently at. And so it really starting to look like we were going to roll over, and there was too much resistance at that 100K psychological level, which coincides actually with the 2 trillion market cap. So I was expecting a lot of resistance there. Even took some profit, which I share with my followers on that last move to 97K, and before we started to move down. And so I think, actually, most of the on-chain indicators are all showing that the 4-year cycle is still right on track, which is a bit contradictory to like many of the narratives out there, which were all saying like Bitcoin is following the business cycle. And so I'm not arguing that we could not start following the business cycle at some point, maybe earlier than previous bear markets. But I would like that confirmation by, we really would have to move above certain key on-chain levels before, that becomes like the base case. So for now, the bearish move, the 4-year cycle is the base case, and we could potentially move as low as to realized price, which is currently at 56K. So I actually expect that the next 6 months are actually really a tremendous opportunity from one point of view. The next 6 months could, Bitcoin could still be chopping around or potentially drop as far as 56K. Now that doesn't have to happen. We don't have to get there. As I said, we didn't have as much upside in this cycle. We didn't ever get that parabolic move up, and so also the reason we don't have to move as deep. In the last cycles, we actually had a lot of crypto companies that were falling over. We had a cascade effect, a cleanse of the market, which was really needed at that moment. Currently, like some people are saying similar things about strategy companies, but in my opinion, strategy companies are a much better company, or they have much less risk to it than some of these crypto companies in the previous cycles.
You mentioned the strategy companies. I assume you're talking about Bitcoin treasury companies. That's been a big narrative of 2025. What's your thought on how those have played out? Was this kind of how you always saw this going, or are you a little surprised by the quick rise and then fall of a lot of those Bitcoin treasury companies? What's the beat you've gotten on them after about a year and a half of seeing those kind of pop up everywhere?
Yeah, so the treasury companies, in my opinion, are actually a proper. It's basically you're leveraging the fiat system and it's a play on the fiat system in a way, and so I think it's actually a sustainable company. Like especially strategy and some, maybe there's some out there that are taking more risk. But I think it's a solid strategy to have a Bitcoin reserve and to buy with cheap DApp Bitcoin. And if you compare it, for example, to real estate, it's super normal, right? Like every person takes on a mortgage and they're buying real estate with a loan in dollars. And so, but once you do it with Bitcoin, suddenly it's unsustainable. Why is in real estate it is accepted, but in Bitcoin not? I think it's only lack of knowledge. And so I think the treasury companies are a long-term play on the fiat system. And so currently Bitcoin is indeed underperforming. And so some of these treasury companies are suffering just a little bit, but I think they're able to get through it. And just as if you're able to pay your mortgage, these treasury companies will also be able to sustain this down move in Bitcoin. And as I said, I only expect this bear market to last six more months at most. And so if they can get through the next 6 months in terms of paying their mortgage, they should be fine. And so I think there's much less risk than previously that we saw with the crypto companies.
Okay, yeah, no, that makes a lot of sense, and I appreciate you breaking that down for us a little bit, especially as, we saw a bit of a failed breakout attempt for Bitcoin around that 98K level, and I got to imagine that kind of caused a lot of panic to set in for a lot of people out there. So my question for you, Ruud, is How should people think about that rejection near the 98K mark without jumping to any kind of extremes right now? What would you be telling them to kind of assuage their fears a little bit in terms of where you think this market is heading? Do you think that 56K level is likely, or is that just worst case scenario, we can all exhale now type of situation? What's the beat on what you've got, and where do you see us going through 2026? You think bear market the first 6 years, then we see an uptick in the second half? What are you kind of getting from the analytics that you're looking at?
Yeah, so currently we're still following this exact 4-year cycle trend, which could basically mean another 6 months of bearish price axis with potentially 1 or 2 legs down further, potentially, like in the worst case, as I said, touching upon that realized price, which is currently around 56K. But that is really the worst case scenario. So there is actually some reasons why we could move out of that bear market early, which is, due to ISM, the PMI index, which is currently above 50 again. And so the business cycle is kind of moving out of that negative zone. And so we could see, and also with Trump, with the federal, Kevin Walsh is becoming the new federal head in May, and so we're going to see a drop in interest rates likely, and so we could see an uptick there, and so I think there's reasons to assume that we won't get as low, but so I would say, like, if you're trying to accumulate Bitcoin, the next 6 months is the opportunity. I would DCA and over this whole period, spread it out over the next 6 months, and in the best case, you get the buy at the perfect lows around the realized price, but I wouldn't get my hopes up for buying Bitcoin that cheap. I think there's still this gradual institutional demand. There's even going to be gradual demand from treasury companies all the way through, and so I think we don't necessarily have to get there, and we could potentially recover above those. You mentioned that 98K level, which is like this psychological. Well, the 100K level is the psychological level, and so we recently had like the short-term holder cost basis, which is the on-chain average purchase price for people that are a short time in the market. That was more or less around that same level, and so that serves as resistance if we're below it, but also support once we're above it. And so it's hard. It kind of it differentiates between bull and bear markets. Now, we recently were rejected off it, and so that is actually confirmation that we're in a bear market. But at some point, the more times we're going to kind of push at that level, we're going to break through. And so I still expect some resistance around that 100K zone, just as, with Bitcoin reaching 10K, we had a long time that we were, we touched 10K. There was this constant meme like, this is the last time we moved below 10K, and then Bitcoin dropped another time below 10K. And so I think we're having a similar structure now going on with the 100K psychological zone. There's many like long-term holders in Bitcoin that were willing to take some profits at these levels. And so I think Jordi Visser called it in a great way. He called it the Bitcoin's IPO moment, which I think is a great analogy. When a company goes public, usually you have like this temporary price chop because the early investors are taking some profits, but that actually means the success of Bitcoin. And so I think we should also see this as a success of Bitcoin. Like some of the early investors that are literally sitting on 100x or 1000x gains, they're taking some profits at these levels, which I think is fair. But eventually that Bitcoin is going to move into stronger hands and even institutional hands now. And so the more times we're going to push against that level, at some point we're going to break through, and then we're ready for the next move up.
Yeah, no, I think everybody is ready for that next move up, and we were hoping it would be earlier this year. As a lot of people were talking about the 4-year cycle is dead, and now it's all going to hedge on macro events, but it sounds like you still think that it's still very much intact. So my question for you, Ruud, is on the on-chain side of things, were there any indicators that made you start treating this more like an early bear market structure rather than just a normal mid-cycle dip? Was there anything that stood out to you to make you feel like the normal Bitcoin cycle is still very much in play?
Yes. So I have one indicator which is live on my platform. It's the multiplier. It's actually based on the value that flows into Bitcoin, and then to measure how much the upside is of Bitcoin. And so I actually broke it down into like an inflow and an outflow multiplier, and you can actually see that these nice cycles in that indicator. There's like an inflow and an alpha multiplier, which are actually moving like a sinus, and they're crossing each other. And so they show like the cycles of Bitcoin actually. And so those were actually turning over, and so we're actually seeing that they were crossing, and they were that it was very likely to move into a bear market. And so there's more indicators, like for example the short-term holder profit, which I just shared on Twitter. You can that chart is public now on my Twitter page, and so you can see how that structure is very similar to a bear market. And so therefore also, as I said, like, so if it moves like a bear and growls like a bear, it's probably a bear. I think that's the right way to go about it. And once we start breaking like the key resistance levels, once we manage again to move above the short-term holder cost basis, which will take some time, because usually like building a bottom takes time. And I think momentum, as I said, was taken away a little bit by AI and gold at the moment. And so it's likely that we'll still have some chop in Bitcoin before we really form a bottom, and then we're ready like to if we set a new low, like, but it will also be like a cyclical low for Bitcoin again, and so we can start moving, like it's a new base to start building up from. And so I think that is coming, but usually those things take some time to develop, and especially given the momentum is a bit more with AI and gold, I think it might take a little bit of time.
Yeah, and Root, if I wanted to walk on the optimistic and sunny side of the street here for a second, what would you be looking at in terms of things that could potentially invalidate your bear case? Like, what data would tell you that the market has actually successfully flipped back into a healthier trend rather than this potential bear market you see us going into for the next 6+ months?
Yeah, so the bullish case would definitely be if the ISM continues like moving strongly up from now. We're now back above 50, and so the business cycle starts to kind of actually move out of like this bearish case, and so I would like to see what equities are going to do. I think there's reason, like if the ISM keeps moving up and steeply in the next months, that could potentially mean that Bitcoin could follow sooner rather than later, and we don't have to have the whole 6 months of bearish action. And so and then it becomes a bit of a definition thing. I still think I would call this a bear market, even though we're now only at 38%. I think in the previous bull market we had a mid-cycle dip that was stronger than the current price that we're at, level that we're at now, if you look in percentage terms drops. But if we look at the overall structure, so the fact that Bitcoin moved in this 4-year cycle pattern, it was literally at the end of the 4-year cycle where the top was expected that we started moving into the bear. All on-chain indicators are starting, showing the similar behavior to previous bear markets, and so there's the base case remains the bear for now. But I would definitely like to see the ISM move up steeply. And Trump doesn't want the economy to go down. He will do anything to keep it up ahead of the midterm elections. And so there is a fair chance with ISM now, like kind of diverging this cycle, like compared to other cycles, that we move more into a bullish case. But for the confirmation I'm waiting for is moving back above the short-term holder cost basis, and that would be for me like I'm willing to change my view. But I still think you could see it then as a definition problem, like, oh, it was a mid-cycle dip or it was a bear market. Even if we get 2 more months of down price action, I mean, it becomes more of a definition problem where you could either call it a bear, a short bear, or you could call it a long mid-cycle dip. But yeah, so we'll see from there.
Yeah, we will see. I gotta tell you though, I kind of feel like we're probably going to be experiencing a dip either way, very much in part because this story that we've been talking about on today's show that I want to get your thoughts on. Of course, we're talking about Bitcoin being dragged into the Epstein file. So I'm going to read the story and then you and I are going to jam about it real quick. Okay, Root, here we go. So the documents pulled Bitcoin into the conversation through claims tied to early Blockstream fundraising and alleged proximity to Jeffrey Epstein via third-party investment channels, prompting a blunt response from Jack Mallers. Let's take a listen.
The last thing I will let happen to humanity is Jeffrey Epstein rob us humans of the invention that is Bitcoin. That's the last thing I will do. Fuck these people.
Now, Mahler's point was simple and consistent with Bitcoin's design. Bitcoin is a neutral, open source public utility that does not grant favors, screen participants, or accept influence. Adam Back later clarified that any Epstein-related contact amounted to a brief indirect minority investment through a third-party fund that fully divested years ago with no governance rights, protocol influence, or control over Bitcoin's development. Importantly, every confirmed financial channel tied to Epstein's crimes runs through traditional banks, not Bitcoin, and no court filings or settlements cite Bitcoin as a tool used to fund or conceal his activity. For those of you at home, this should matter because it separates optics from facts and keeps the focus on institutional failures rather than assigning guilt to a decentralized protocol that cannot be compromised by association. We're bringing Root back. Root, what was your initial thought on this when you heard them people try to tie Bitcoin and Epstein together? Give us your initial thoughts on this one.
Yeah, in a way, even credibility to Bitcoin for having this connection, right? It shows the importance of Bitcoin. Of course, I think if anyone, like, I think it's more fair, as you said, like JP Morgan should be, they should go after JP Morgan rather than Bitcoin or so. But it seems that indeed some of the early cypherpunks had some connection to Epstein, or Epstein was looking to get in contact with them and I'd potentially blackmail them, because Bitcoin is a new important technology. And so I think, pretty much they're on top of those things, especially since it's about money. And so I don't, it's not strange to hear that there's some of those connections within the community. But I think, at least what I get, and from personally have met with many of those early, crypto cypherpunks, even as far as Adam Back, for example, they're super humble people. They are, with like, and that gives me hope in general in the Bitcoin community. People are always looking for the ethical thing to do, and so I think it's kind of funny how the worst of the fiat system is kind of trying to get in touch with the early beginnings of Bitcoin and kind of tie them together. But I think it's in a way it's the opposite movement, and so Bitcoin is a solution to many of these issues. It takes away power from those powerful people in certain fiat structures. And so I think, I'm not surprised by any of the ties, but I don't see it as any risk. Bitcoin is open and neutral. There's 1,000 eyes watching the code. And we could clearly see that recently with, for example, the debate between core and not. There's just like it's a minor change. Even if you're an outsider, you wouldn't even know what they're discussing. But there's a huge fight within the community about what is the best solution there. There's 1,000 eyes watching the code and having all kinds of discussions about what is the ethical way forward, right, about Bitcoin. And so I think that is super healthy. And I think, the whole Epstein connection, will fade in no time, to be fair.
Part of me has to wonder too, Root, was this Epstein Bitcoin connection just mostly confusion and bad framing, or does it maybe feel to you like more of a deliberate attempt to associate Bitcoin with something toxic by proximity alone? We've seen it before. Is this another case of that, kind of akin to, I think about the Silk Road immediately comes to mind?
Well, I think the Epstein, there were connections everywhere. I mean, it's not only Bitcoin. Basically, in every corner of the fiat system, there were some ties, and I think Epstein, tried to contact any person with. That's why I said it's a bit of a credibility for Bitcoin, because if you had some tie to Epstein, it meant that you at least did something in the world that mattered at a level that was important enough for him to try and contact you or potentially even blackmail you at some point. And so I'm not surprised by any of these connections, but indeed they were indirect, and they were only by through some of the core developers, not all of them, and many of them even never went further with communicating with him. And so I think that shows only the ethical part of Bitcoin, and so I'm not worried at all about the Epstein connections. As I said, Bitcoin is open source and neutral, and nobody can change the code, so definitely not Epstein.
Yeah, it does beg an interesting question, though, right? From your perspective, Root, why do you feel that decentralized systems like Bitcoin so often seem to become narrative targets when institutional failures come back into focus. Why do you think that is? Is that just people playing the try to shift blame elsewhere game? Look at this, look at this, look at Bitcoin, even though it's really the big banks that are the big failures here? Or what are your thoughts on that?
Yeah, I think, Bitcoin went through all these phases in the early days. I mean, Bitcoin was the money of the black market for some time before we found out that actually, it's a public ledger and it's not good for doing illicit activities. And but in the early days, people didn't know, right? It seemed like this anonymous internet money, and so it was tied with the black market Silk Road you mentioned, and so it's no wonder that people like Epstein were looking into it as like, okay, what is possible with this technology, and how can I have a certain influence if this becomes more powerful? So I think that is what happened. And I think, Epstein had, basically tried to contact every person in the world with, I think there were ties to PayPal as well, or and to other companies as well. So I'm not worried at all by these ties. I think Epstein was after power in general and influence and trying to persuade and blackmail, and wherever that was needed, and apparently that was also needed for Bitcoin.
Yeah, no, I think you're right. And kind of as you mentioned before, it's almost like if Epstein wasn't trying to get in touch with you, it makes it sound like you probably weren't that big of a deal to begin with, which I almost hate saying, but you could kind of make that case, as to your point, for Bitcoin a little bit. Root, it's been so fun having you on the show today. I got to say, it's been a blast. So thank you so much for joining us and sharing your insight and expertise with us. I know you've got a very popular X page where people can go and check out your musings and analysis. So what's the best place I can send anyone in our audience if they're interested in getting to learn more about all the things you got to say, my friend?
Yeah, so I'm on Twitter as @TheRationalRoot, and I have thebitcoinstrategyplatform.com or bitcoinstrategyplatform.com and bitcoinstrategy.substack.com, where I share my newsletter and insight. And I'm on Nostr as well, which is a decentralized protocol, like Twitter, where I'm also at TheRationalRoot.
Amazing. Well, Root, it was such a pleasure. Thanks so much for taking the time to join us in the show today, and we hope to have you back real soon, my friend. It was a real good time. Thanks again.
Thank you. It was a lot of fun, and glad to be back on sometime in the future.
I'm going to hold you to it. Thanks, Rational Root, and I'll see you later. Enjoy the rest of your week, my friend. All right, gang. Well, that is a wrap for today's episode here at Roxom TV News. But don't worry, we'll be back tomorrow, Thursday, with more of the day's top news stories for your viewing pleasure. And if you haven't already done the thing, just do it. Make sure to like, follow, and subscribe to Roxom TV, Roxom TV News, and me at Hank at Roxom TV on all your platforms of your favorite choosing. And we'll be back tomorrow at our 8 a.m. time slot right here at Roxom TV for more of the day's top stories. So thank you so much for tuning in, and I'll see you boys and girls tomorrow.